Hello and welcome. This is Bloomberg Quint's roundup of all the stocks which are in focus today, and of course, it is going to be all about earnings. Now, while we have seen the Nifty gain as much as 1% for now, what it really does not reflect is two very important Nifty counters falling well over 10% in today's day of trade. And by that I mean Tech Mahindra and Sun Pharma. But before I go into Tech Mahindra, let's start off with Sun Pharma on a weak set of earnings. Jayesh, we're not looking at a very good set of numbers there.
Absolutely, Agam. So, before I delve into the finer details of the numbers, one common theme that we are seeing across the pharma pack is that, they're facing a lot of US pricing pressure. So that said, weak numbers coming in for Sun Pharma, below estimates on account of US pressures. The margins have contracted due to a one-time inventory write-off.
Right.
But even if you strip that off, still the margins have come in at only about 26% versus 29.7% something. The key takeaway from the management call was that they have guided for a single-digit decline of revenue in FY18. So that's a big concern that the street is really spooked about. What they have also said is that they are expecting the US revenues to decline by about 15%. So all these factors together not looking very well for the stock itself, down and out about 10%. But it's very rare on such a day that you have two leading counters fall as much as 10%. So why don't you just take us through the Tech M numbers?
Right. So, when it comes to Tech Mahindra numbers, we know that we've seen a contraction in margins. Now, it's EBIT levels, EBIT margins falling to single digit. So, that is something of a concern. While we were expecting decline in top line on a quarter-on-quarter basis, this was, what the real surprise was, of course, on the bottom line, which has also come off substantially, partly because of the deferred tax. Now, when it comes to Tech Mahindra, again, remember that after its numbers came, we had 17 analysts come in with their ratings, and we've had 6 downgrades out of those 17. Not a lot have cut their price targets, but this still brings the average price target down to around 492, which is still a considerable distance from where it is currently trading at, that is around 370 rupees. So we'll have to wait and watch as to whether or no we do see a little bit of recovery. Well, again, it's anyone's guess, but for now, that's the reason why we're looking at that big knock. ONGC was the other set of numbers coming in today.
Yes, it was a mixed result. The revenue was up 9%. Q on Q to 21,714, but it failed to cover up the analyst estimates.
Okay.
And net profit declined marginally to 4,340 crore due to higher employee cost and jump in the royalty payments. Now, the employee cost increased by 54% Q on Q. That was on the expected lines, but then that also weighed on the profit. And though the crude oil prices are higher in the quarter, they were offset by lower gas revenue, lower gas contributions, and higher expenses. Even the chairman of the company accepted that the gas business is no more profitable for the company, as the cost of production is more than the set oil or set gas prices, that is around 2.5 million British thermal units.
Right. So, well, that's what we have for ONGC. I know we've also had numbers from Adani companies, Adani Transmission and Adani Power. Adani Power wasn't a good set of earnings, was it?
Yeah, so the stock has nearly lost around 5% today in the early deals. It has reported a net loss of around 4,960 crore versus a profit figure of around 1,012 crore that we were working with. Now, Adani Power has reported the loss is worse than what was estimated. Revenue was down by around 17 odd percent at 6,352 crore. EBITDA was down by 61%. This is mainly on account of power and fuel expenses, which form around 86% of the overall expenses and 68% of your total sales. So obviously there we saw that disappointment creeping in. Now the disappointment is mainly on account of the write-off that the company had taken. Now this write-off sums to an amount of around 3,620 crore that we saw for this quarter. This was mainly on account of the judgment which was against Adani as well as Reliance Power sometime back that we saw, where it denied the compensatory tariff to both these companies, in effect to which the company has taken a hit of around 3,620 odd crore, Agam, for that matter.
Well, there you have it. So we have seen weakness in Adani Power as well, but we have more pharma companies in focus today.
Absolutely, Agam. So over the weekend it was all pharma, and I believe today it's all going to be about capital goods. Before we go to the previews of capital goods companies that are going to report today, Cadila Healthcare was another company which reported earnings. Broadly in line, not much over there, but there was an operational disappointment that came in over there. While the miss in EBITDA margins that the company has cited was mainly on account of the R&D spend that they have.
Right.
So that played a part on the EBITDA margins. But what the street is enthused about is that the company is saying that the India business grew at 11%. And going ahead, the management is guiding for a mid-teens number in this. So from 11 to about 15%. That is what the street is really watching out for. The other counter that came out with results was Divi's Labs.
Right.
Not so good, below estimates. The margin was miss on account of a forex loss. Now their unit 2 had an import alert during end of March 2017. While that has not been fully accounted for in this quarter, the company is saying that the entire impact will be seen in the coming quarter, which is Q1 of FY18. But aside from pharma, there were plenty of earnings over the weekend. I believe Somit has picked up something on DLF as well as Mahindra Gas.
Mahanagar
And
Gas.
of course,
Gas,
Mahanagar Gas
Yes.
and IGL
Yeah.
was
Yeah,
something
the city
Somit
gas
has been very,
distributions.
very,
So-
very positive about. Yeah,
Yeah, the
give us
Mahanagar
some
Gas,
numbers.
the city distribution company, gas distribution company. Result was good, and revenue was up 4% to 576 crore compared to the last quarter. Net profit though remained flat at 99.5 crore.
Right.
On the volume front, the company sold around 2.62 million metric standard cubic meters of gas per day as against 2.56 last quarter, mainly on account of new customers that they added in this quarter. And also the company declared a dividend of rupees 11 per share, that is after they declared an interim dividend of rupees 8 per share. Now the second stock was DLF. Revenues were down 13% to 2,225 crore compared to last year.
Right.
And company also reported a net profit of 136 crore as against a loss of 181 crore. Now this is mainly due to lower tax outgo and an exceptional gain of 94 crore. On the other hand, the net debt of the company increased by 700 crore to 25,096 crore. And on the con call, the management also said that the residential business now is still under pressure as the pre-sales were down 34%, and for FY18 also they're expecting it to remain under pressure on account of RERA and GST implementations.
Somit, we have Coal India's earnings today. What are we expecting from there?
Coal India revenue is expected to rise 8% to 22,498 crore, led by higher sales volume. In quarter 4, the company sold more than 150 million tons of coal. Now, net profit on the other hand is expected to fall 8% to 3,893 crore, largely due to higher employee costs. On the realization front, the FSA, that is the fuel supply agreement realizations, are expected to rise 3% to 1,392 per ton, while the e-auction realizations are expected to rise 10% to 1,723 per ton. And we also have Bharat Petroleum Corporation Limited, which is expected to see a revenue rise of 6% to 56,460 crore, while net profit is expected to go down 24% to 1,735 crore compared to last quarter, while the GRM, that is the gross refining margins, are expected to come around $5.5 per barrel as against $5.9 per barrel in the last quarter.
Well, thank you, Somit, for that. It's a big day for earnings, guys. And over the weekend, pharma was the clear, the sector to watch out for.
Right.
But I believe Nikki is under pressure to cover a lot of earnings today with the likes of L&T, BHEL, Power Grid, and NTPC. Nikki, what's the word on the street?
So obviously we are looking in for these key earnings going today. It's going to be a result heavy day that we're looking at, something like L&T, NTPC, Power Grid, as you've mentioned. Obviously there are a lot of things that we are working with. Do keep an eye out. We'll soon be back with all the earnings preview for you guys. Thank you so much.